the way that compound annual growth rate is measured, and for folks who aren't familiar with what this means, is basically saying if you have an asset, here's your starting point at whatever price it was on whatever date. Here we are 5 years later. What is the percent gain if you just take a long average? It's gone up at like 15% every single year, but it's compounding. So the first 15% then gets compounded by another 15%. So it's basically taking what is the profile between start date A, start price A, and where we currently are, how much has it changed as a linear percentage? Now, the problem with that is if you measure the starting point at the top of a bull or at the bottom of a bear, and you measure your end point at the top of a bull, at the bottom of a bear, any combination of those, your CAGR just, it's all over the place. So there are, look, you can measure it in various different ways, but my approach and what I did with the report yesterday, just go, well, as a Bitcoiner and as a gold holder, I can now look at Bitcoin and say, well, fundamentally, are we a $5 trillion asset? And I think I struggle to find a reason why we will not get to some kind of a price of that magnitude. And I'm not talking about in 10 years' time. Like, I think Bitcoin belongs substantially higher because as a gold holder and as a Bitcoin holder, I can tell you Bitcoin's better in every single way. It is just better in every single way. So I know that it is a more than a 10x improvement on the legacy system, which is gold. And I think that the market is slowly but surely, gradually going to work this out as it has been, which is why Peter Schiff has had 1 year out of 17 where he's felt really, really good. Silver's ripping through the roof. I mean, silver bugs have grown silver hair waiting for this move. This is like their whole life. They've been getting slaughtered by the price, and they finally get a run. Let them have it. So Bitcoin's been doing this for pretty much its entire life, consistently top of the charts in terms of best performing assets. So my view on CAGR is just like, I ran the numbers. Let's look at it 10%. Let's look at it 15, 20, and just eyeball how big would it be at the end of a 10-year period? What asset can I compare that to on a relative scale? Does it make sense for Bitcoin to reach that kind of a level? And I just use that and like, really, I get up to like 25, 30%. And only then you start creeping into like, when you get to 50%, you're like global GDP, it's like, okay, that's probably a little bit of a stretch. So 50% CAGR is probably a bit heavy, but it's definitely not 10%, at least in my view, right? From my perspective, 10% is way too low. 15%, 20%, 25%, it's like, that makes sense. Makes a lot of sense. Like getting to where gold is now over the next 10 years, like I literally said, I put a box down the bottom and said, my opinion, imagine betting against that as a possibility. So that's where I sit. I just think of it from a more fundamental standpoint.
100%. I would be highly surprised if by 2035, gold would be substantially bigger than Bitcoin. Like that would surprise me like really bigly.
Well, my base case is the gold will be bigger than Bitcoin in 10 years' time. That's just because that is the current status quo. So my assumption is, and again, I'm trying to be a bit conservative because that's my job. My view is that gold will be bigger. It'll be bigger than where it is now, in my opinion, because like the sovereign debt crisis is not going away. It's going to get worse. So I think gold's going to be much bigger. So I'm like, all right, let's benchmark Bitcoin. Can Bitcoin get to where gold is in 2020 or in 2025? Like, can it just get to where gold is now? Gold's going to go and do its thing, and then Bitcoin needs to just like catch up. For me, from a conservative standpoint, I'm not going to say like, well, gold's also going to be up here, so therefore it's going to be bigger than that. Then you start talking about real exponentials, but I'm like, can we just get to gold today? Because if we get to gold today, every single Bitcoiner will be extremely happy because we're coming from a $2 trillion base, which in the grand scheme of things, like it's big relative to where Bitcoin's been in its past, but it's small relative to the pool of capital that is out there and the size of assets.
Yeah, it's like, that's why Bitcoin makes a lot of fun because like even the conservative view on Bitcoin is like, yeah, it's still like really good.
Correct. Yeah, totally. And honestly, that is the energy. What you just said right there, that is the energy that I think Bitcoiners need to adopt and take into this next couple of years. Even if we get a conservative target for where Bitcoin is going, it's going to kick ass. So like that is really, in my view, the real energy we should be going into it with.
I have this, I don't know if it's unpopular, but like this view that if you're not happy with like whatever 15 or 20% CAGR over a long period of time, you don't have a savings problem, you have an income problem. it's probably not the savings technology. I want to talk about strategy also because I literally 2 days ago, old friend of mine was here. He isn't that big into Bitcoin, but I told him like, oh, I'm researching researching strategy now, and he was like, oh, what is strategy? And I was kind of giving him like a very simplified version of like how I look at strategy right now. And he's like, oh wait, so they are doing the same thing as like central banks did with gold? And I was like, kinda. Is that like a reasonable assumption that like strategy could be even like a central cyberspace company?
Yeah, I mean, there are a lot of parallels. And what I find interesting about strategy is there's a lot of parallels that you get like 20%. So it's like 20% like a central bank. When I think about Stretch, it's a variable rate coupon yielding perpetual bond. It's kind of a bond. And the idea is that they can ratchet the interest rate up and down to generate demand or drop demand for it, right? And then what do they do with that? They go and acquire assets with it. So part of that, having a variable rate interest rate that a lot of people are going to be exposed to, there's a bit central banky. They've got an asset pool being Bitcoin, but that's about the 20% where it makes sense. And then suddenly the correlation breaks down. You can look at all sorts of different business models. You're like, it's kind of a bit of this and it's a bit of that. It's a very interesting system. Strategy continues to be it's something that like, I've gone in and out of it, just trying to like get my head around. I'm very much an advocate for in markets, when you put money on the line, you then go and study it at a much greater rate. So I find that you've got to put some capital in to just like work it out. I sold mine at $300 back in like mid-October, because I started seeing some red warning signs just across the broader market. Strategy was my risk position, and my thesis that it was going to run harder than Bitcoin as we went to all-time high. It just didn't play out. So I was like, my thesis is wrong. I need to exit, step back, and watch it. And I've been watching it ever since. And I've since rebought about half of my position down like $158 or $160. That was my, like, I think because it's down at 1x MNAV, I'm just seeing what they're doing, these preferreds. I'm like, there is demand for their product. And in my view, one of my big long-term views for treasury companies in general, the treasury is not the product. And I think this is where a lot of investors and probably even treasury companies get it wrong. They think that just owning a boatload of Bitcoin is the answer, but I don't think that is the answer at all. The answer is the means by which you accumulate. So for Strategy, for example, their product is these preferreds, which are basically, they never have to refinance bonds that pay a very healthy coupon, 3 times larger than the risk-free rate in Stretch's case. Is there demand for an asset that stays at $100, pays an 11% coupon in a world where the money market risk-free rate is 3.5% and probably going down? Yes. The market loves yield, and something like that has a huge total addressable market. So Strategy has a product that I'm very confident the market has a lot of demand for. What happens when a company hits product market fit? They produce a lot more of the product. So they're going to sell a ton of this stuff because there is demand for it. And what do when they sell a ton of this stuff? They buy Bitcoin. And here's the trade that they're really doing. If we believe Bitcoin's going to monetize the way that we've been talking about, it's going to continue to trend higher at more than the coupon rate that they're currently issuing at, then the base case is that the obligations that they have to pay every year, they've got to pay 11%. It's going out the door. That's like the leakage that's coming out in coupons. Will that leakage, let's imagine they stop selling preferreds and they just sit there and wait. Eventually, Bitcoin's going to be higher, and suddenly the amount of outflows will get much, much smaller. Their obligations will shrink relative to the Bitcoin that they hold. So for me as a shareholder, that's accretive, because now the balance sheet gets the equity that's left over once they clear all of their debts and obligations. That is ultimately what shares are. It's the equity in the business after you've cleared all of your debts and obligations. Suddenly the equity is worth a whole lot more, right? Because they've got that leverage component as Bitcoin gets bigger. So I'm actually of the view, and I wrote a piece recently talking about why I took my position. Even though they're diluting right now at an MNAV of 1, they did the USD reserve, which I think built a whole lot of trust that they're going to pay the dividends, which means people are going to buy the bonds or the preferreds. Because people are going to buy the preferreds, it means they can sell more of them. I'm actually okay as a shareholder being diluted at 1x MNAV. And this is something I think a lot of people probably haven't quite, and I could be wrong, but this is my opinion. If I buy Strategy when it's an MNAV of 3, I'm buying 33 cents of Bitcoin and 67 cents worth of premium, right? I'm buying a lot more premium. And my expectation is that premium has to get bigger. But if I'm buying Strategy at a 1x MNAV and they're using the proceeds to buy Bitcoin, and I believe that, like, unless Strategy goes bankrupt, At an MNAV of 1, it's more or less trading like an ETF. So and again, this is purely a price exposure perspective. When I'm buying strategy as a shareholder, an MNAV of 1, I'm buying all the history, all the Bitcoin they've already bought, all the infrastructure they've already laid. I'm buying all of that history. So really, I'm actually buying my dollar value worth of Bitcoin in that business with all the infrastructure attached to it. If I'm buying it at a 3x premium, then I'm getting 33 cents worth of Bitcoin. So the way that I think about it as a shareholder, I actually don't mind when they dilute me at 1x MNAV, because it's building more of that base that when it starts moving higher, Bitcoin starts moving higher, suddenly they can sell a ton more of these stocks. And I want some other dude to pay the premium down the road because they get caught up in the euphoria, and I will be selling to them. So that's ultimately the way that I think about it. I actually don't mind being diluted at 1x MNAV because it's kind of like me buying an ETF for Bitcoin in terms of price exposure. And I do view strategy as my risk position, right? As all Bitcoiners, like I love having self-custody Bitcoin as my primary holding, but also I kind of want an asset that I just want to trade and like hold it for a shorter period of time and just ride the waves, because I hate selling Bitcoin, but I wouldn't bat an eyelid if I was going to sell my strategy. So for me, it's a risk position that I've been in this market long enough that I'm like, I think I have an edge by just thinking through these problems. I'm going to ride this wave, and in my view, I think it's going to outperform BTC on the way up. I'm not looking for 50x multiples. I'm not looking for some penny stock treasury company. Like for me, I kind of just want a bit of a multiple, and I also think the business model they're doing, it's a company that sells a product that I know there's a lot of demand for, that I think is going to have a lot more demand in the future. So it's a real value investor type approach from my view.
Yeah, it's like at a premium of like 6% or 5%, like it almost seems ridiculously cheap. Like if the whole thing works out, like I was like with strategies, like if the execution is good and Bitcoin is good, like at a premium of like 6%, like that's premium of 6% means 1.06 MNAV for people. But like that, like the more I look at it, I'm like, oh, like those levels look super juicy.
Correct. Yeah, no, totally. And are they going to go into an MNAV of like 0.5? I don't think so. They did in 2022, but like I look at the infrastructure they've got now, and most importantly, Bitcoin is in a downtrend, and one of my longest standing challenges for strategy is they've never been able to buy in a downturn until now. Now they are buying in a downturn. They seem to have, and as you would, right? I mean, imagine the compute cycles that Saylor's been through in this journey, being down however many $1 billion they were in 2022. You just think about this stuff a lot. How do we adapt for the next bear? And in my view, they've now switched into what looks like not quite daily, but a daily DCA type model, weekly or bi-weekly. And I've run plenty of models trying to understand, like, how can you out trade Bitcoin? And honestly, unless you're really in the weeds trying to play with like, algorithms and all this type of stuff, daily DCA is one of the hardest strategies to beat. It's just so unbelievably difficult to beat. For the average person, really, I don't know why you do anything else. Lump sum, obviously, at the perfectly right time beats it, but that's its own skill, because like some people will be waiting for the bottom and they won't be invested at all. Then the market will run. And if you miss some of the best days in a Bitcoin cycle, I ran this study as well. If you miss the 10 best days, and of course, this is not a perfect model, but I just set all the 10 best green candles to zero, you're actually down, or sometimes you lose money on the Bitcoin cycle. So those 10 days make up for all the chop, all the down, all the bear, the whole lot. 10 days make up for it. And why do people trade? They want to miss the 10 worst days. If you miss the 10 worst days, your return from a cycle goes from like a 10x to like a 15x or a 20x. So yeah, you get twice the performance, but you're risking getting a zero, right? So you're risking the whole 10x just to get that extra 2x worth of juice. And daily DCA is just hard to beat. And when the company started switching into what kind of looks like almost a daily DCA, that's an unbeatable strategy.
Now, if someone, like most people have like one job and they like get maybe one salary, maybe a second one, so they get paid depending on where you live now, but like in Europe, maybe monthly, in like America, maybe bi-weekly, so like twice a month. So you say daily DCA, is it better to just like when you get money in and this is the money that you don't need, the savings rate, basically just like put it in there on the day you get it, or spread it actually out through like the whole month of like making, instead of instead of like $300 in the beginning of the month, like 30 smaller buys. Like, okay, you take so management is then also a whole thing you have to witness, but you have to exchange. But how do you look at, like, if someone gets paid once a month, how they should think about deploying it monthly versus like maybe bi-weekly or like weekly or like daily even?
Yeah, I mean, it totally depends, because I mean, it depends on your goals. Like for some people, again, there's different extremes here, right? I've definitely gone through the money in or gone, right? I went through a whole many years where I was like, money in, pay bills, everything else, like literally 20 minutes after I've got my paycheck, there's nothing in my bank account. It's just all gone into Bitcoin. That was my life for many years. So I've been through that journey.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.